Welcome back to another session of Savvy Startup. I'm Tony. I'm teaching this lesson today about business taxes. And this is an important part of this course because this comes down to the money, how you made the money, who you paid, ultimately, at the end of the day, how much of that money you actually get to keep. So this is going to be a very important and potentially exciting part of your business because depending on how you fill out your taxes and address taxes in your business is going to determine the profitability and longevity of your business. Now, this is a big topic, and I'm going to tell you right now, this will require some help from what I would suggest from a tax professional or an accounting professional as you move forward with your business. Now, we're going to be talking about some high level stuff. We're going to give you some great information. But when it comes to taxes, I will say, whenever a client comes to myself or JJ with Tim and Imran, what happens is they'll come in with very specific or unique questions. And the most common response that we give them as a starter to our response is going to be, it depends. So when someone comes to us with a tax question, when someone comes up to us with a legal question, we will generally start with, well, it depends. And we use that phrase, and it's not concrete, and we understand that. And then we understand that can also be frustrating. But what we also understand is that the vastness of the tax code and the complexity and the intricacies of how all of the different components of taxes work to whittle an entire year experience of money being made and spent, whittling that down into one tax form or multiple tax forms that kind of get you to that final number of this is what you made, this is what you owe kind of number when it comes to taxes is a challenging thing. And there's a lot of components and a lot of factors that we have to consider when looking at that. And so that's what we're going to dive into a little bit today. More specifically, some of the specific forms that you as a business owner now need to be aware of if you're not quite yet. So when it comes to taxes, there is a difference between personal taxes and business taxes. And we're going to dissect that, but we're going to focus on the business tax side of things. And so we're going to talk about personal taxes, business taxes, and where 1099s come in. Now, on a previous video, as you've watched this course, we have a video on filling out your SS4 to get an EIN and a W-9. That W-9 video leads into what we'll talk about today when it comes to putting together the 1099s, which is essentially what was paid out to others from your business. But, as you've gone through this course, you may have realized we talk a lot about how to protect yourself, how to factor in running your business and create systems, how to consider the money being made in your business. Well, JJ he will commonly share a quote when it comes to asset protection. There's a statistic out there that 1 in every 4 people at some point will be sued. Well, as a business owner, it's your responsibility to try to protect yourself from those types of lawsuits. And setting up a legal business entity allows you to do that. Well, I'm going to give you another statistic. 4 out of every 4 people will pay taxes. Now, we have yet to figure out a way to completely get you out of taxes ever in any situation. What we have done a very good job at is figuring out how to address taxes legally and ethically to put you in a situation to where you can lower how much you potentially owe the government in taxes. Now, our feeling is, listen, it is, as a business owner, it's your privilege and right to go out there and make money. And it's also, something where in doing so, you should pay taxes based off of the money you make. We just don't think you should pay more than you're legally responsible to do. And that's where filing taxes and addressing these forms that we're going to talk about today come into play to make sure that this is something that is done properly. Now, just as a little insight on me for myself, and why I started Advanced Tax Group with JJ. Early on, personally, I found that I really despised paying taxes and even dealing with taxes. it paying taxes or dealing with taxes can be a lot like going to the dentist. It's not a fun experience. People don't necessarily look forward to going to the dentist to get their tooth drilled. Well, a lot of people feel the same way about taxes, whether they're doing it themselves, using some of these services like TurboTax or H&R Block, or they have an accountant that's helping them do it, or maybe they're doing it themselves. So whatever situation you find yourself in, we don't find a lot of people who truly enjoy taxes. And it's not an enjoyable experience. The IRS doesn't necessarily make it easy to go through and identify ways to lower your taxes, but there are ways to do it. Okay. And if you do it the right way, you can put yourself in a great situation to keep more of that hard earned money you're making. And I'm not going to share this to scare you, but my personal opinion is the IRS has a sign above their door somewhere that says, we have what it takes to take what you have. And so the IRS, they haven't necessarily presented themselves or branded themselves as the most friendly, supportive government agency for us. But they have given us a map on what we do need to do as business owners. And what I can assure you, and what I want to make sure that I can impress upon you is, as a business owner, you will be required to fill out these forms. And if you do it correctly, you will give yourself a chance to lower your taxes and keep more of that hard-earned money. Now let's talk about personal taxes. Your responsibility to pay personal taxes has always been there since you started making money. This is going to be on Form 1040. It's the easiest form, most straightforward form the IRS has to offer. Now, what's crazy is if you go into the tax code to look up, like, how do I fill out my 1040? The IRS has graciously given you over 150 pages describing how you fill out the simplest form in taxes. So, when you look at that being the simplest form and it's a 150-page description on how to fill it out, just imagine what it's going to look like as you start building your business and start getting more complex with having more vendors come in and more money come in and get more creative and branching out in the ways you make money. It can be overwhelming. But when it comes to personal taxes, this is where you report a culmination of all of your individually earned income. And that can come from a number of places. That can be your W-2 income that you earn from your job. It can also be the income that is flowing through from businesses, like an LLC that has flow through taxation. But this is on your personal taxes is where it all kind of culminates. And it determines the amount paid or owed in taxes. This is where you get that final number. So at the end of the year, when you're filing annually with this report, this is where the government says, well, you still owe us taxes. You didn't pay us enough. Or they say, hey, throughout the year, you've been paying us taxes, and it turns out you paid us too much. We're going to give you money back. And so there's going to be a refund for you. Now, what's crazy about that is on your personal taxes, if you overpay the government, you've effectively given them a free loan all year long. And then they're gracious enough to then say, all right, here's a refund amount back to you. Okay. But you're not collecting interest on that money, are you? Okay. So it's important to be aware of how that's working. But you need to know your personal taxes are going to be due April 15th every year. And you can file an extension yourself or with an accountant. And that's going to push you out till October 15th. Okay. But that's something to be aware of on the personal tax side of things. Now, as a business, there's a couple different things you need to be aware of. Now, as a business, you can be a sole proprietorship, you can be a partnership, you can set up a corporation or an LLC, or take the corporation or LLC and tax it like an S corp. Now, filing business taxes is a completely separate process from your personal taxes. Okay. So as you open your company, you're going to be required to file taxes differently and separately from the personal. Now, some of that information may flow through to your personal tax returns. And so you file one cumulative return depending on what you're doing. And this is going to be a deeper conversation that you'll want to have with your accountant, or that you'll want to research on your own, depending on what you do and how extensive that variety of businesses is and the variety of ways you make money. But ultimately, some of these different businesses will file taxes differently. Now, a corporation is a completely separate business entity, and in such will file a completely separate business or corporate tax return. So these are the things that you have to consider when looking at and addressing your business. Now, when you're looking at 1099s or 1065s, let me explain what these are. In other videos, we've talked about the 1099 process. This is where you, as a business owner, are working with other vendors and you plan to pay them for services. So let's say, for example, I'm a contractor and I'm paying a subcontractor, maybe a plumber, to work on a property I'm remodeling or flipping. Well, I plan to pay them at some point, which means I'm going to send them. I'm going to need a request. I'm going to send them a request for a W-9. That W-9 that we talked about at length in another video gives us all of their information for their business. This is where we get their business name, address, EIN number. So we know exactly who we're paying from our company. So from a tax perspective and expense tracking, we know who we paid, where the money went. So at the end of the year, we can account for that money. Now, if we have money coming in from multiple places, or we have non-employees that we're paying, all of this could ultimately funnel down to a 1065. But ultimately, that can be determined depending on how you file, whether you mail the information in or it's done online. Again, a much, much deeper conversation that you'll want to have with a tax professional that will be helping you with this process. Because doing personal taxes and doing it yourself is definitely something that can be done. A lot of people do it, and there's room for error, but it can be done and it can be done well. When you get into the world of business taxes, I will suggest working with a tax professional, whether you have a local one or you want to talk to us at Advanced Tax Group. This is what we do for business owners, to identify all of these components and all of the tax laws that are out there. Because in the tax code of the United States, there are millions of pages that describe and break down how these taxes work. And so it is going to be important that you do get that help. Now, when considering your business taxes, whether you do them yourself or you are getting a tax professional, what's going to be super important for you is going to be keeping clean records. Okay, this is imperative. When it comes to doing your taxes, your accounting professional needs to know where that money came from, where it went. And so proper bookkeeping, use Savvy CFO. That's what they do. They help you go through the bookkeeping. Financial statements. This is going to be your profit and loss statements and your balance sheets. Again, Savvy CFO can help you with that. We're going to encourage you to save all of your receipts, invoices, payment stubs, anything where money's gone out or come in. Save all of this information, because all of that information is going to tell the story of your business. Where money went, where it came from, where is it now? So that can be properly reported to the IRS, and you can either pay what's owed or receive back what's been overpaid. But clean records and bookkeeping is going to be so, so important. Now, I know we have another video on doing this, simple ways to be able to do this, whether it's through QuickBooks. There's a couple suggestions that we have on there, but this is going to be so important when it comes to getting those taxes done. Please don't look past what this piece is and how important it is for your business. Now, many businesses, if they're making money, will work differently than your personal taxes, because as we talked about, your personal taxes are done once a year. But as a business, you may and probably will be required to report quarterly. Okay, this is your quarterly estimated payments. This is done every 3 months. So as an individual, what happens is you make money all year long, but every time you get paid in a paycheck, this is called your W-2 income. Anytime you get paid, you're most likely paying a little bit to the government in taxes. So every 2 weeks when you get paid, there's a little bit that's going to the government to pay taxes. So you're prepaying year round for those taxes. Which is why at the end of the year, when you file your personal taxes, the government comes back and says, well, you've been paying us all year long. Turns out it was a little too much. Here's a check back to make up for the difference. Well, as a business owner, the good news is you actually have the opportunity to get your money and use it first. You don't have to pay taxes immediately on the money being made as a business owner. So what the government then says is, well, let's have you make estimated quarterly payments throughout the year as opposed to just once a year at the end. And so on a quarterly basis, the government's going to say, well, based off of what you made last year or what you're looking at this year, let's make an estimated payment so you don't fall too far behind. And you can put money into that tax system. And so that will be required, and it's done every 3 months. So the quarterly system of making these payments is done January 15th and then every 3 months after that. So January, April, July, and October. So it's just an ongoing process of getting these things filed. But in that process, what you're doing is you're making those payments and staying on track, because as a business owner, it's easy to lose track of where you're at with your taxes. And this is a good practice so you don't fall behind on that process. But then annually, you will have to file those tax returns as well. Depending on the type of business you have, depending on how it's structured, what your tax status is, whether you're a single person LLC or a partnership or multi-member, it will determine the type of return you have to file. So again, talk to your tax professional about what your tax status is, because it may change the day you have to file your taxes. You may owe taxes on March 15th instead of April 15th, or vice versa, depending on your tax status, the formation of your business and how you're being taxed. And this is where you start looking at, your forms, 1040s, 1065s, 1120s, and these are all the different forms that will then be filed depending on the type of legal structure you set up. Each structure, from an LLC to an S corp to a corporation, will have to file, to an individual, have to file different tax forms, and you have to file them accordingly. So you may have to file all of them depending on how many legal structures you've set up and in what fashion. Now, when it comes to tax deductions, this is where it gets super exciting for our clients, because the basics of a tax deduction is it's money spent on the business that can be subtracted from your taxable income. And so essentially what happens is you're flipping the order of who gets your money. When you are doing W-2, when you earn W-2 income from an employer, you work hard, the government takes their taxes out, and then you get what's ever left over in taxes. You get what's ever left over after taxes are paid. So it's that post-tax dollar amount that you're then expected to pay your rent and cell phone bills and car expenses and live life. Well, as a business owner, you're able to switch that order up. You work hard, you get all the money to then pay for all of your stuff, like cell phone bills and car expenses and marketing expenses, anything that's ordinary and necessary for the business. And then after you've spent money on all of those things, those are all now called tax deductions. You get to subtract those out of your earned income from the business, and then you only have to pay taxes on what's left over. So it's a phenomenal benefit to where you can actually lower the amount of money you pay taxes on. So you can actually make the same amount, but pay taxes on less. And that's a huge, huge benefit. So a couple examples, phone, cell phone bill, like vehicle expenses, marketing, equipment, startup expenses, legal and financial. These are all expenses that you're going to be able to utilize potentially as a business owner. So if you're using a phone for your business to operate and make money, that cell phone can be tax deductible. Portions of your vehicle can be tax deductible. And in some cases, the entire vehicle amount can be tax deductible. Marketing expenses to get your brand out there and bring in more business. These startup expenses, anything that we've talked about when it comes to setting up your legal entity or hiring an accountant to prepare your taxes or hiring a bookkeeper or CFO to help you run your business more effectively. All of these things now become expenses that can be written off as tax deductions, helping your business grow and expand and become more profitable while paying less in taxes. Now, we do recommend, like I've said multiple times through this video, work with a tax professional. The world of taxes, is one of those places that you need certified and credentialed individuals, because the tax laws are expansive, they are confusing, and people go to school a very long time in order to understand how these taxes work. Just like if you needed to have a surgery, you probably wouldn't operate on yourself. You know, Likewise, when it comes to finances or the legalities of your business, it is important to go to someone who has training, who has the understanding to get you the best results. Because what happens, not only does it get you better results in the sense that a good accountant will pay for themselves, their cost is tax deductible, but also if they understand their profession, they're going to find the deductions and the savings you need to lower your taxes. And that difference, that savings, should more than cover the cost of the accountant to begin with. Now, they keep you safe as well. They're going to keep you on the straight and narrow of what's allowed and not allowed in the world of taxes. So a good accountant is going to understand what you can and cannot do for taxes, keeping you compliant and safe when it comes to filing your taxes. Because if you misfile taxes or take deductions the wrong way, that can lead to the big A word, which is audit, right? We don't want you to run into those audits. And a good accountant is going to keep you safe from an audit. They're going to get you effective results while keeping your risk low. And this is important because tax laws are ever changing. In fact, we probably have a tax law changing right now as we speak during this lesson while you're watching this. And so with those laws ever changing, it's important to have someone on your side keeping an idea of what those laws are and how they can help you. And finally, it allows you to focus on your business. Unless you're running an accounting or bookkeeping or tax business, you really should have someone doing that to focus their time and effort and attention on that, so you can focus your time and attention on what you do, running your business. That's what you're passionate about. Don't get bogged down by the things that don't excite you. You want to leverage your time and your resources by having other people do the things you don't want to do, so you can do the things that you do want to do. Now, in summary, when it comes to taxes, there is a difference between personal and business taxes, but I will guarantee you are going to address taxes every single year. Business taxes are filed quarterly and annually instead of just once a year like personal. Tax deductions are designed to lower your taxes and help you as a business owner carry the cost of running a business and get the financial benefit of that. And we do recommend working with a tax professional. So in that, we would love to have a conversation with you. If you need help with your taxes, reach out to us. We'd love to talk to you. If you need help with keeping your books or getting financial statements put together, reach out to us. Talk to Tim and Imran at Savvy CFO. We have collectively the resources you need to run your business effectively with your taxes. Now that does wrap up this lesson. But we're so excited to continue to educate you in this course, this Savvy Startup course, because there are so many videos that we have here that you're going to be able to tap into. So don't miss all of our other courses. Stay tuned, go to the next video, find the video that makes the most sense for you, but definitely make sure to get that information from this course, and we'll see you in the next one.